Okay, I'm going to give you some tips on doing the budgeting project. As far as one of the things you want to make sure is that you're using the Excel that you downloaded at the beginning of the semester onto your hard drive. Do not use Excel out in the cloud or numbers. Absolutely not. You will get a zero and I don't want that to happen. The other thing that's important is that once you open the project file, you want to make sure you save it on your hard drive, not out in the cloud. Mac users, you want to maybe Google how to save on your desktop or save a file on your PC to avoid issues, because I've had that happen too often where somebody thought they were getting the project, but it ended up getting it out in the cloud and it didn't save properly or submit properly. So just be very careful. And if I neglect to say this at the end, always make sure after you've uploaded your project at the end in eCampus, look to see that your file is the one that's in there by looking at the view. They have a sample view below of what's on the file or in the file. Okay, username. Mine is, it's basically whatever you log into eCampus with. Let's make this one I'm making one up. As soon as you do that, what was here was a value. I'll show it to you again. So by entering it, it populates the sales in units. Okay, I want to show you a few things in terms of how you calculate increases and also how you use Excel to do the work for you. So I'm going to go here. I have sales equals sales in dollars is equal to my number of units times the price. As far as, whoops, I must have hit something wrong. Let me try again. Equals number of units times 5. And there's my sales for the first month. Now the budget is such that it's predicting a 10% increase in sales. So each month our number of units is going to increase from the previous month by 10%. Excel wise, the way you put that in is you're always going to want to round to the whole number, to a whole number. So the way you do that is you type in equal round, and then you're going to go to the cell that you're going to increase, which is 22,200 in my example. Multiply it by 110%, which is 1.1. And then you follow it by a 0, meaning no decimals. Close parens, hit enter. So that's a 10% increase from the prior month. You do the same for June. All right, and then as far as calculating the dollars, it's price times quantity. As for collecting, in this example you have 90% being collected in the month of the sale and the remainder in the following month. So as far as the amount here, you have your April sales of 111,000. 90% of it, so you're going to go again, you're going to round, equals round, or equal round, click on the sales, and then you multiply it by the percent that you're going to collect, which is only 90%. And then you enter 0, close parens, and that's how much I will collect of April sales in April. The rest of my sales, which is equal to, round, the 110,000 times the rest of it, which is 10%. Again, 0 decimals. So you can see here, if I go equal sum and sum these across, that should equal my sales for April. You do the same for May and do the same for June, and now down here is your sum of these columns, and that's how much you collect each month, and this is summing across, which is going to be how much you collected in total for the quarter. The accounts receivable is basically the same formula that you have for your amount that you haven't collected yet. That's what accounts receivables represents. So in other words, 10% of our sales for that month has not yet been received. So that's what accounts receivable is. As far as purchases, in this example, we have again a requirement to meet sales of 22,200, but we also want to end the current month with 10% of that month's sales. So again, I'm going to go equal round, click on the units, and then I want to multiply by 10% because I need 10% on hand to start the next accounting period. So I will need to buy the sum of these two, or $24,420. I don't have any beginning inventory initially, but you can see this is my ending inventory becomes the next month's beginning inventory, which automatically populates for you. So to figure out how many units equals sum these two, which that's how you'll do May and June because you will have beginning inventory. And as far as the amount we have to pay, equal times, these are already whole numbers, so you don't have to do rounding. All right, desired ending inventory. Now you have to recall that the desired ending inventory is 10% of this month's sales. What you have to purchase is not the entire amount. So I'm going to go ahead and do this for you. Equal round. Oops. This times 0.1. Whoops. So here's the total required, but I don't have to buy all that. Why not? Well, because we have the 2,200 left over. So that is equal to the beginning minus the ending. Excuse me, I said that wrong. The total required minus what you already had left over from last period. And so that's what you have to purchase. So again, similar to the collections, we're going to do our payments, and it's the same idea. So you're going to follow the same process that I showed you earlier, but you're going to be using your purchases in dollars because that's what you're buying. And they pay 60% in the month of the purchase, the rest of it in the following month. And the total should equal your purchases. Accounts payable is what you haven't paid for yet. As far as the flex budget, again, what's happening is this master budget is what you are expecting to have happen, and that information's here. You've got to figure out what's variable versus fixed. Again, variable costs go up in total with each additional, in this case, hot dog sold. Fixed costs will remain the same whether you sell one hot dog or 10,000 hot dogs. So you need to determine which of these costs that you are incurring in this budget, which are variable and which are fixed. And then again, variable costs have a, shall I say, fixed cost per unit, i.e. each additional hot dog will add in costs that amount per unit or per hot dog. The flexible budget, what you're going to be doing there is, again, this will populate, you'll have numbers here. You'll be told how many units you actually sold. So what you have to do is figure out what these amounts should be given the actual hot dogs sold in this project. Then what you're going to do is you're going to compare to the actual costs, compare your flexible to your actuals to get a variance. And a variance is favorable in the case of sales if your actual amount is greater than your flexible budget, i.e. that's what is expected to be the case given the number of hot dogs sold. And likewise, costs are favorable if your actual spent is less than what was expected to be spent given the actual number of hot dogs sold. So I hope that you'll be able to go through this project. Be careful to follow these instructions. Go slowly. And as always, if you have any questions, come to tutoring hours. Happy to help. Good luck.